Alright, good afternoon everybody. Hello, and welcome. Welcome to this week's weekly webinar. This is going to be a great one. Today's topic, we're going to go over how to build a trading strategy. This is going to be a part 1 of part 2. So this first video, we're going to go over the basics, how to get started, how to find a strategy that might fit your personal style and personal trading style. And then the next part 2 will be in maybe next week, maybe the following. And we're going to go over some more in-depth, and we're going to actually create some real-time trading strategies, and I'm going to be creating them with you guys. So that's going to be a good one as well. Is trading strategy something like put my hand-earned money into a brokerage and watch? No way, Chicken Hawk. No way, absolutely not. A strategy is something that we build based off of certain criteria, whether it be using a moving average, using a MACD, using volume analysis, or even using price analysis to find good trade setups that will work more probable over time. So let's get into it. Hello everybody, happy Saturday. Hope you're all having a great day. Hope you're all looking forward to this webinar. This is going to be a very informative one. Let me just make sure you guys could hear me all right. Just want to make sure. Hello. All right, that should be good. All right, so building a trading strategy part 1. Again, guys, this is going to be part 1 of 2. This week, we're going to go over the basics and how to figure out which one is a good strategy for you. And next week, we're going to go over some real-time strategies, and I'm actually going to build some trading strategies with you guys. So definitely stay tuned for this webinar, so next webinar makes more sense for you. All right. So let's get into it. Define your trading goals. Now we should always have trading goals once we create a trading strategy. And having goals actually helps us to acquire a proper trading strategy so we could implement it accordingly. So as traders and individuals, we all have different goals from one another. Whether it's to replace income of a job, to bring in extra income, whatever it may be, we need to know our goals. Tailor your goals to risk tolerance and trading style, and use goals almost as a compass for informed trading decisions. Well-defined goals provide direction on our trading journey and let our goals help guide our success. So if I have a goal to hit 5 points on ES every day for the next 20 days, I'm going to try to reach that goal, but I'm going to implement a trading strategy that is well deserved and well earned in the market, and that's something that I could backtest. So the next thing we're going to look into selecting a trading style. So we need to explore various styles, whether we're scalping, which could be anywhere from seconds to minutes, day trading, which is usually minutes to hours, and swing trading, which is sometimes just into the next day, or can even be weeks. So there are 3 basics: scalping, day trading, and swing trading. So it all depends on your personal trading style and how you are in a day-to-day lifestyle, right? Are you a very quick person? Do you feel the need to be in and out? Do you want to try to ride the momentum? Well, then you might be looking to scalp. Are you more patient? Do you want to wait for your areas of interest to hit? Well, then you might be more inclined to day trade. Or are you really patient, waiting for the right perfect entry? Now, no, I'm not saying there are perfect entries, but you would maybe be more inclined to swing trade so you could let the trade play out. Now, align your chosen style with your personality and lifestyle. Understand the advantages and disadvantages of each style. So with swing trading, you have more of an advantage of being in a trade longer to capitalize on much larger moves than you would see on just a day trading scale. And same with day trading compared to scalping. We are getting in larger moves than scalping because we're okay holding our position for longer to let the profits hit our goal. So your trading style influences the core of your strategy. Once you figure out what kind of trading style you want to trade with, then you could really get into what kind of strategy you want to use. Whether you're using a moving average, whether you're using VWAP, whether you're using supply and demand, support and resistance, it all depends on the type of trading strategy and the type of trading style you are looking for. What's going on? Raise the standard. Appreciate you joining in today. This is definitely going to be a good one. Market analysis. So perform comprehensive market analysis as the foundation. So we have the core, and our core is going to be our trading style. Now we need a foundation, and that foundation is to understand how the market moves, understanding how to read pivots, understanding what a trend is versus what a range is. So combine fundamental, technical, and sentiment analysis. These are all three big things that we want to combine when making our charts, when making our trading strategy, and looking for areas to enter and exit trades. Stay informed about events shaping market movements. We want to be aware, is there going to be a news catalyst today that might create a huge spike in the market? Or is there no news and we might see a bit of a range? Sometimes what happens is, let's say Monday rolls around and we're in a bit of a tight range. There could be news on Wednesday that the market is sort of quote unquote waiting on. So we might not see that momentum or volatility until the market gets that news. Effective analysis guides you, and by being ahead of the game and being prepared, we could see potential opportunities before they play out. And that's really great, and we could really use that to our advantage, because then we could be in the market or in a trade before we get the big move that we're looking for. So if we're using something like supply and demand and we see we're in a daily demand zone, we might look to swing trade that and take that trade and be in that trade longer. Entry and exit criteria. This is so important, guys. So craft precise entry signals using indicators, patterns, and chart or volume analysis. Now, as many of you know or watch in our live streams, I'm a big fan of using supply and demand and support and resistance, which I call key levels. And by using these, I'm able to say, okay, let's take a look at the market. Has the market been breaking demand zones? Has the market been creating supply zones, or vice versa? And I'm able to get a feel for market sentiment based off of that, right? Based off of the fact that, okay, demand hasn't been working, which tells me we're in a bit more of a bearish market. Or if I'm looking for lower highs and lower lows, that's also telling me we're in a bit of a bearish market. Define criteria for exiting trades with profits or stop losses. This is important too. Once we're able to have a proper stop loss and take profit level, guys, we have to know that everything in between is just noise. So I wrote right here, if it's not at my stop or my take profit, it's just noise. The market knows what we're looking for as traders and will try to stop us out every which way. That's why it's so important to, before we even enter the trade, know exactly where we're stopping out and know exactly where our take profit is, because then that also gives us the peace of mind that if it does come down to our stop loss, we know how much we're going to lose and we know that it's not going to hurt our account. So again, right down here I say, having set entry and exit criteria can reduce emotional decision making. And by doing that, by reducing our emotional decision making, it lets us be more robotic. It lets us really implement our trading strategy accordingly. And that's what we look for, guys. We can't trade off emotions. We can't trade off a feeling, because that's impulse. We can't trade off impulse. Nick Vaughn says, hey bro, are you looking at any tickers? No worries if not. No, Nick, I'm just doing a little bit of a webinar today just based off of how to create a trading strategy. But I will show some examples in a few slides based off of these strategies, based off of scalping, swing trading, and day trading, and what kind of technical indicators that we could use for those strategies. Alright, so position sizing and risk management. Employ position sizing techniques for capital preservation. We don't want to go too heavy in it. We don't want to be too heavy in size that if it goes to our stop loss, our account's blown, because that's poor risk management. We must start small, especially if we're starting on a new trading strategy, because trading is the most scalable business out there. What you could do with one contract, you could do with 10 contracts. So if I'm building a strategy and I'm trying to hit my goal of 5 to 10 points every day on ES, and I do that for 20 trading days, and I'm seeing consistency, well, then I could go from 1 contract to 2 contracts, 2 contracts to 4 contracts, depending on the size of your account and depending on your risk tolerance. But it's always good to start small so we could see the results before we get heavier in size and start risking more than we need. It's always good to follow the 1 to 2% rule to manage risk per trade. So if we're on a $100,000 account, we don't want to be risking more than $1,000 to $2,000. And our goal with that is to also gain upwards of 4% per trade, right? That way our winners are outweighing our losers, and we're really able to grow our accounts, even if we take more losses than wins. Consistent position sizing ensures controlled risk exposure, and this could help us to stay calm during the market movements. So as you guys know, and when I'm trading, and as you guys could see from our previous live streams, I'm very calm, especially when I'm in trades. And when I get in trades, you have to stay calm, because it's when the market gets impulsive that it could sort of start to throw you off and think, oh, well, it looks like we're getting weak here, I'm going to take profits. And it might be before your take profit, and what that does is it makes you exit the trade, and it also throws off your risk to reward on that trade. Then let's say it continues trend and it does go to your take profit, that trade that would have worked out, you just stopped out of too early, not because it hit your stop loss, but because of emotion, and emotion plays a huge role. Hey, what's going on, Phoenix Trader? What's going on, Joe? Welcome to this webinar. Is there a way to print these out later by chance? Joe, there's not, but I do actually send the PDF of all of these to our members in our Discord community. If you guys want, check out bullishbears.com. Would definitely recommend signing up soon, because we are having a bit of a change in price eventually. So if you get in now, you'll be grandfathered in with a better price. We do have monthly, yearly, and annuals. Hey, what's going on, Matt? Happy to catch you live, too. I know you're always watching these, so I appreciate you liking and commenting. Alright, so effective risk management safeguards your trading capital. Again, guys, we could have a 50K account and take loss after loss after loss, but as long as we have a solid risk management, as long as we're only risking X amount per trade and gaining X amount per winning trade, we're really able to let our winners surpass our losses, and we're really able to build from that. So backtesting for optimization. Glad to have the lifetime membership. Absolutely, yeah, guys, that lifetime membership is golden. Very golden. You know, it's Bullish Bears. We've been around for 7 years now. We're a well-established community, very large community, full of very like-minded traders just like yourselves, people starting out, people with experience, and it's really great. You know, me and Bullish Bears Jeremy, we go live every single day for you guys, Monday through Friday from 9:30. I like to get on a little earlier, around 9, so we could do some pre-market analysis, and till about 11 or 12, depending on how market structure is that day. So if market's a bit choppy and slow, we'll all end at around 11, and it's good to have a time that you could end your trading so you could call it a day there, and so you could also preserve your capital, because if you give yourself that set time, that means you can't lose anymore, right? But that also means you can't gain anymore, but that's okay because you're following your rules, and it's always important to have rules in trading. So validate your strategy with thorough backtesting. Whether you're using TradingView or Thinkorswim, they have great replay software. If you're looking to look through some options trading and to look at the backtesting on options trading, I would recommend looking at Thinkorswim. That's a TD Ameritrade platform. And if you're looking for maybe something along with futures or equities as well, TradingView has a really great replay system too. So I would definitely recommend checking both of those out. Utilize historical data to evaluate strategy performance, so we could always backtest. And what's great too with TradingView, guys, is you're able to use their backtesting software, put in exactly what you're looking for. Like if the stock crosses VWAP and it's above the 9 EMA, I'm looking to go long, take profits at 15 points, stop loss at 5 points. How often does this hit? And then it'll run that backtest for you and give you results. So that's really interesting too. Continuously optimize strategies to adapt to market changes. Guys, this is super important. So I've noticed a lot recently, some people have been coming up to me and asking, oh, well, I've been doing the supply and demand with you. But over the last, not this previous week, it's actually been working very well. But the week prior, a lot of times the demand zones would be getting broken. So buying at demand wasn't working. What I was telling these people is that yes, supply and demand is a great strategy, but because the market is always changing and the market structure is always changing, we have to adapt to those changes. We have to acknowledge what's going on, what's been going on in the past few days in the market. Have demands been respected? No. Okay, well, then I'm going to look for only short setups or only supply plays, right? And so on. So those are great ways to use these different strategies to understand market structure as well. Backtesting and optimization to refine your strategy's effectiveness. So we can't always be forward testing. The market only moves 1 second at a time with us, right? 1 minute is 1 minute, 5 minutes is 5 minutes. But there's enough historic data that we could backtest for days on days on days. Even if we just want to open a regular trading platform, scroll back 180 days on the 5 minute candle and use our indicator or use our strategy that we were looking for to backtest and trade that accordingly. So there's always ways to backtest, and it's super important, especially when you're establishing some type of strategy that you want to use in the market. Emotional discipline. I'll make this one a little bit quick, guys, because I know I cover emotional discipline quite often, and that's because it's a huge piece of the puzzle. So master emotional discipline for consistent strategy execution and results. So if we're executing with very good emotions and we're staying disciplined, we're going to see the proper results. If we're getting in based off of emotion, if we're saying, oh, well, it's near the 9 EMA, 9 exponential moving average, I'm going to enter, but then it fails right through, you're not going to get the proper results because one of your rules should have been let it close after rejecting the 9 EMA. Now you're getting in before it closes above. Now you're getting in before it even does that. So you're getting in and going against your own strategy. You're going to get poor results, and it's going to be poor execution. Emotions can impact decisions and trading performance. Learn techniques to manage emotions and avoid impulsiveness. Again, guys, we could be giving ourselves rules to help say, okay, well, I'm only going to enter in demand if I start seeing a lot of wicks on the 5 minute showing that there's buying pressure. Or I could only enter at supply if I see a double top forming, a triple top, or again, some type of wicks suggesting that there is a lot of selling pressure. A lot of people also use order flow. That's a great tool too. Bookmap as well. All these great tools in the market that we could use to take advantage to see where there's selling pressure, where there's buying pressure, so we could buy with the market and sell with the market. We don't want to be fighting trend, and we don't want to be fighting large order flow. So a disciplined mindset is vital for effective strategy implementation. Just like I mentioned in the last slide, we can't have proper execution and proper results if we're entering and exiting based off emotion. Then you're just being an emotional trader and you're not going to succeed. I'm sorry to say it, but you have to stay disciplined at all times. And what that does too is that takes the stress of being stressed off of our shoulders. When we're trading, we don't want to get in and be like, oh my goodness, be sweating, be worried, is it going to hit my stop loss? No, when we get in, we understand where our stop loss is, we understand how much we're risking, and we also understand how much our profit will be. And that is huge. To know how much on both sides per trade is a must. You guys like the little logo over here? Bullish bear? It's funny. So continuous learning, guys, just like I've been mentioning in these past few slides, you got to commit to ongoing learning and skill enhancement. Markets and market structure is always changing, therefore our strategies must change with the market. So staying on top of our education is very important. It's always important to be learning new stuff as the market also takes in new information. Think about it this way, the market's given new information every day when news hits. Every day when there isn't news, there's always information being absorbed into the market. So why shouldn't we, as traders, as individuals, also be learning with the market? We should be. That way we can adapt to market conditions as well. Stay informed about new techniques and market developments. Be aware, are we in a trend? Are we in a range? And how can we take advantage of that? Lifelong learning contributes to long-term trading success. That's so important, guys. We want to be continuously learning so we don't end up slacking off. We want to be on our game 100% when it comes to the market. We have to treat it like a job because the only person in charge of us is ourselves. Now, I could help you learn and do all these webinars, but it's up to you guys to show up and make a difference in your own trading style to learn and get better as a trader. So it's definitely good to be continuously learning in the market while the market is also continuously learning and adapting. So summary of developing your trading strategy: you have to understand your risk tolerance, goals, and trading style. Are you a scalper? Are you a day trader? Or are you a swing trader? Perform thorough market analysis to identify potential opportunities. Again, depending on what kind of strategy you want. If I'm a day trader, I'm going to be looking at the 1 hour, the 4 hour, the 2 hour. I'm going to be looking at some hourlies for some zones before I go higher with the trading, right? And if I'm looking at swing trading, I'm going to be looking at the daily, the weekly, the higher time frames because I'm expecting to be in this trade for days if I'm swing trading. And then scalping, you want to look for some smaller ranges, could even do 15, 30-minute zones. That works as well. Define entry and exit criteria based on technical analysis and indicators and chart patterns, right? So we want to be on our game. We want to know what indicators we're using and all of that. Guys, just so you know, I'm going to do a little Q&A after. I do see a bunch of you commenting in the comments. I'm just going to sort of hold off on that so I can get this webinar out of the way for you, let it run smoothly. Then we'll do a little Q&A. Alright, so the next section is going to be different strategy examples. So I'm going to go over some scalping strategies, some day trading strategies, and some swing trading strategies for you guys. And don't forget that this is just going to be a part 1 of a 2-part webinar. This first webinar is just explaining how to create a strategy that fits you and how to develop a strategy while the market develops. And then next week's webinar is going to be more in-depth. And I'm actually going to create some strategies with you guys and do a little backtesting with you guys. So it's going to be a really great webinar. Don't forget, hit that like and subscribe button, guys, so you don't miss out. And we do go live Monday, Wednesday, Friday for free on YouTube for you guys. So definitely keep an eye out for that too, which again will be changing. We are going to be changing some of our pricing soon. So I would recommend checking out bullishbears.com and signing up to become part of our community. We have a very large Discord community where we go live Monday through Friday. It's me in one room and my friend Jeremy in another room, and we both have our own different trading strategies and different styles. I'm more of a day trader, he's more of a scalper, so we offer different types of strategies in different rooms for you guys to learn. It's really great. Would definitely recommend joining our community. Alright, so let's get into it. Scalping strategy example. So scalping is an ultra short-term trading technique for fast profits and fast results. If you're scalping, you want to be in that trade and out of that trade when you see those profits and when you're good with that. When you're scalping and you're in a trade and it starts going against you, you want to be out too. Because the whole thing with scalping is it's harder to have a more defined risk to reward, because usually when we scalp, we're scalping with momentum. A scalping strategy should be used to take advantage of quick price movements that are usually caused by increased volume or news. Identify precise entry points using moving averages, MACD, VWAP, and other indicators. And vigilant risk management is vital due to the rapid-fire nature of scalping trades. So for an example, I have on the right chart over here, I have the 3-minute time frame of Amazon, and I have the Bollinger Bands on that. So in the circles, you see every time we break through, we reject and have a pullback. We break through, we reject, create a lower high, and we have a pullback to the bottom of the Bollinger Bands. Then over here, we start sitting on the bands and we start rejecting back upwards. Then it sort of gives us our range. Yeah, increased volume is not a system signal. Mr. Dev pointed out in the chat. Just wanted to say that that it is not. I was just mentioning that it normally can be used. Like if we have increased volume, it usually brings increased volatility and momentum. A lot of times we won't get extra momentum out of nowhere. Usually there has to be some type of push from that because the market moves with volume. Alright, so day trading strategy example, and on the right I have an example of using the 2-hour supply zone, and this was on ES. This is actually a trade we took in our previous live session if you want to check that out from Friday. We took a long over here from demand, which is not marked off in this chart, and we took profits about right over here because our first take profit was a 30-minute supply zone. So that was a really great trade, and it was a 5-to-1 risk to reward. Engage in day trading for capturing opportunities within a single market session, whether we're in a trade for 30 minutes, 45 minutes, an hour, 2 hours. That's day trading. We want to be in at our areas of interest, near our moving averages, whatever it is we're trading based off of, and we want to be out once our target is hit. So day trading strategies can incorporate trend lines and volume indicators along with supply and demand style strategies. Recognize optimal moments for breakouts or reversals based on trend analysis. So another trade that we took in our community was that there was a large trend line coming down on ES and NQ that every time the market created a lower low, it would reject that lower low and we would get a relief bounce. So what I told the community was, let's be aware of this, and although yes, creating a lower low is bearish, the past few times we rejected this lower low along with this trend line, we've had a bit of a bounce from that, and that's actually what gave us this really nice trade here. Again, you guys could check that out on our previous live session too. Don't forget, guys, hit that like and subscribe button. We do go live frequently for you guys. So recognize optimal moments for breakouts and reversals based on trend analysis. If I didn't see that we weren't failing these lower lows, then I would have been more skeptical to play longs in a bearish market. Now, we might not be in a bearish market in a whole, because what I remind everybody is if we look at year-to-date on ES, we're bullish. If we look at year-to-date on NQ, if we look at year-to-date on Apple, Nvidia, Tesla, all these large cap stocks, we're in a bull trend. We're in a bull market right now. But every bull market does need a pullback. A pullback is healthy in a bull market. A pullback is healthy in a bear market. We want to see pullbacks. So it's people taking profit, it's people adjusting, it's the market pulling back before a second leg, a third leg, another move. Flexibility and adaptability are key to navigating evolving intraday market conditions. Just like I mentioned earlier, how supply and demand does work often, but sometimes we'll see that demand might not work consistently, or supply might be getting broken consistently. And once we see that, we can't brush that off as, oh, well, this strategy doesn't work anymore. We have to see that as the market conditions are changing. And with changing market conditions, we have to adjust our trading strategy to these market conditions. Swing trading strategy example. Mr. Dev, I see your comments. I get what you're saying. There's no 100% in any type of trading strategy. These are all just examples and just going over the basics. Swing trading strategy example. Embrace swing trading to capture substantial moves, price swings across a few days. Implement a strategic swing trading approach, integrating moving averages and RSI on higher time frames. So guys, whatever time frame we are trading on, we want to be doing our technical analysis on that time frame too. If I'm looking to scalp or if I'm looking to day trade, I might not be looking at the weekly chart as much as I would if I was swing trading. If I'm looking to swing trade, I'm not going to be looking at the 15-minute chart or the 5-minute chart because I'm looking to hold it for days. So if I'm looking to hold something for days, I might look at the 15-minute or 30-minute for an entry, but I'm not going to be watching the 15-minute for a swing trade. I'm going to be watching maybe something along the lines of the hourly, the 2-hour, the 4-hour. It all depends on what ticker I'm watching. If I'm watching a futures contract, I would watch some higher time frames because remember, futures are open 23 hours a day, whereas equities are only open for 6.5 hours. Identify potential entry and exit points aligned with evolving trends. So you see this is Apple from year to date, and you see how we had a strong pullback here. Now we're coming into an area of interest. So if we hold this 177, and it also looks like if I added some trend lines, we're getting tight like a falling wedge. So I wouldn't be surprised if all this bearishness, right, led to a short squeeze and we popped to maybe 180, 184 for a relief bounce before maybe we do continue lower. But again, this is just how I'm reading the market. This is just examples. I'm not saying buy Apple. I'm just saying this is how I'm reading the market, and this is how we should read the market if we're swing trading. We have to be looking at the higher time frame. Yes, Mr. Dev, exactly. 15-minute and 30-minute charts can trend for many days if the charts are tuned to do so. Absolutely. Again, guys, market conditions are always changing. It's always good to look for higher highs, higher lows. Are we creating lower lows? Are we creating lower highs? Understanding just that basicness can help us to see, okay, we should be buying the dip, or okay, we should be selling the rip. Whichever way the market is going, it's good to be aware of those conditions. Cultivate patience to understand the extended holding periods characterized of swing trading. Gotta remember too, guys, if I'm swing trading and I'm in a long entry on Apple right here, and my goal is this is 188 right here, right? So my goal is 188, and I get this pullback. It didn't hit my stop loss. My stop loss should be down here. This pullback is just over a few days. Yes, Mr. Dev, but lower lows and higher highs in themselves are also not a signal, but a condition. Exactly. I was not saying they are a signal. That's exactly what I was saying. They are a condition. It's just a way to read the market. Alright, so summary of trading strategy examples. Scalping, again, is an ultra short-term technique for rapid profits utilizing quick price movements. So if we're scalping, we want to be looking at maybe the 1 minute, 2, 3 minute, whichever one. I personally prefer the 3 minute over the 2 minute, but somebody else might prefer the 2 minute over the 3 minute. It all depends on your type of style, what works for you, and really just getting used to the market and going with the flow. Day trading capitalized within a single trading session, employing trend lines and volume indicators. Again, as Mr. Dev has mentioned, volume isn't an indicator in itself, but understanding where volume is very important. If we have strong volume intraday, then we might look to trend better than a day that might have more lower volume, right? So swing trading, capturing substantial price swings over days with moving averages and RSI. Now, that doesn't mean you have to use RSI and moving averages on swing trades. They're just examples of indicators you can use. But remember, if we're using indicators on swing trading, we don't want to use those same indicators when looking at the 15 and the 1 hour, because looking at the 1 hour, if we're looking at the 1 hour and we're looking at the 9 EMA, that's going to be different than if we're looking at the daily and the 9 EMA, because the 9 EMA and moving averages measure themselves based off of whatever time frame we're looking at. So each strategy offers unique advantages tailored to different trading preferences. The picture cut off different over there. I do apologize about that. And don't forget, guys, everybody part of our community, I will be posting these slides as a PDF so you can download them and look over them again. And Let's see. All right. So that was it for building a trading strategy part 1. If you guys do have any questions, definitely hit that like and subscribe button. I appreciate it. It takes me some time to put these webinars together, and I do enjoy doing it for you guys. So it's definitely something I enjoy doing and will continue doing for you guys every Saturday at 6 p.m. Eastern. If you want, hit that like button and drop a comment below. Comment a question, whatever you got, and I'll answer them right now. Mr. Dev says, what moving averages do you recommend within the 3-minute chart? So me personally, I don't really use moving averages. If I was using moving averages and trading some type of momentum like a 3-minute chart, a 5-minute chart, I would be looking for the 9 or the 8 EMA, and those are usually able to switch out. And something else I've noticed back when I was scalping off the 3-minute was I liked using the 5 EMA along with the 9 EMA. And what that would do, the 5 EMA would hug the candles a lot closer, because remember, the smaller the number, right? 5 EMA, 1 EMA, never do the 1 EMA, that's just measuring the single candle. It's going to be hugging that candle a lot closer. So if we're using the 9 EMA, we could see momentum when the candles start moving further and further away from that moving average. Do the moving averages depend on chart time frame? Yes, Rawl, they do. They absolutely do. So if I'm looking at a 1 hour EMA and it's a 9 EMA, it's going to be reading the past 9 candles on the 1 hour chart. Whereas if I'm looking at the 5-minute and I'm looking at a 9 EMA on the 5-minute, it's going to be reading the past 9 5-minute candles. Now, some platforms like TradingView, you could actually change in the settings that it's reading off of a different time frame based off of the time frame of the chart you're looking at. So that's something interesting. Like if you're looking at the 5-minute chart on TradingView, you could have that EMA set to be reading off of the daily or the 1 hour. So that's definitely something interesting too. But it's always good to do your analysis based off of whatever time frame you are charting. So if you're looking at a scalp, you want to be entering on a smaller time frame. I do apologize, I'm a bit stuffed up, guys. Still getting over that cold and flu. Fun stuff over here. But whatever time frame we look at is the time frame we want to implement in our trades. If I'm day trading, I'm entering based off of the 5-minute and 15-minute, but I'm doing my technical analysis on the higher time frames, the hourly to 4-hour, and sometimes even the daily to look for those stronger zones. If I'm looking to swing trade, I'm not going to be too interested in the hourly or the 4-hour zones because I'm looking for the daily zones. I'm looking for a daily level. I'm looking for a daily area of interest that I might see a pullback and then a trend continuation. And then, right. If I may add something to our assessment of the... Yeah, Mr. Dev, definitely. Add whatever. Add away. For sure. And don't forget, guys, this is just part 1 of 2. Next week, I'm going to get more in-depth, and we're going to be building actual trade strategies examples, right? So I'm going to be building a scalping strategy with you guys, and I'm going to be building a day trading strategy with you guys, and a swing trading strategy with you guys here live next week at 6 p.m. Eastern. So if you guys want to be involved in that, I would definitely recommend joining. And when we do that, it's going to be very interactive. I'm going to be asking you guys, what indicators are you looking for to use? What are you looking for to use? What aren't you looking to use? That way I could get a feel for what kind of trading you guys want, and I could implement my own style, and we could build a strategy together. And, you know, it'll be a good example. I'm not saying that we're going to build the best strategy ever next week, but I am saying that it will help us to understand how to build a strategy with a real strategy example. If you enter a scalp, do you set a bracket with a stop loss, or do you hit a buy market order and then just have a mental stop loss? Victoria, that's a good question, and that definitely depends on your trading style. If you are scalping, sometimes, depending on what platform you use, you could have predetermined stop losses, right? So you could have I believe TradingView has a order button, right? That when you hit buy, it'll automatically add a 5-point stop loss or however many points or ticks you're looking for. So you could have that set up so that you know, okay, I'm looking to scalp, but the max I'll lose is, let's say it's 5 points. You're trading one ES contract, $250. But I would recommend scalping with a lighter stop loss, because when we're scalping, we want to be scalping that momentum and we want to be in and out. And our stop losses should definitely depend and differ based off of where our entries are. Are there some indicators that are more relevant to certain strategies and some that are less relevant? Yeah, that really does depend on what indicators and what strategies you're looking for. So I've noticed a lot of times that the Bollinger Bands are definitely good for scalping types of strategies, or sometimes day trading too. But I probably wouldn't recommend doing Bollinger Bands on swing trading. Swing trading would be more of less indicators and more of technical analysis, more of where's the chart, maybe some type of Fibonacci tool, things like that. Hi, how do you conduct your options trading? Is there different times, videos, or groups? Parrish, that's a good question. Yeah, so we do, in our live streams, we mainly focus on ES, NQ, and the VIX. So those are the 3 charts I have up. Those are the main markets. I trade those futures, so it's something that I keep up with our community, and a lot of the members in the community do trade those futures. However, I always have a chart of equities up on my screen, seeing that I have a few charts and a few layouts, and I always keep things like Apple, Microsoft, Meta, Tesla, Nvidia, and Amazon on my screen, so although I might be showing ES, NQ, and VIX, I'll have those 6 charts up with their respective supply and demand zones, and I'll say, okay, well, it looks like Apple's coming down to a demand zone right now. Let's keep an eye for a bounce. Or, okay, it looks like Meta has more relative strength. That would be I'd be more inclined to take Meta for calls, and so on and so on. If you're looking for biggest move on the lower time frames, 2, 3, 5 minute, we want to increase our moving average parameters. Whereas if we are trading on the higher time frame, then we want to decrease our moving. Great stuff, Mr. Dev. Thank you so much for that. That's really, really, really a great point, guys. So I'm going to read that out loud for you guys in case you're viewing this when it's not live. Mr. Dev in the comments, and shout out to you, my friend. I appreciate that. If we're looking for the biggest move on the lower time frames, 2 minute, 3 minute, 5 minute, we want to increase our moving average parameters. Whereas if we're trading on the higher time frames, we want to decrease our moving average parameters so they don't lag. Fantastic point. Thank you so much. I appreciate you for sharing that. Very good stuff. See, that's what community is all about, guys. It's being part of a community, learning from the educators, and even having some of the members also chime in and mention things that I may have missed. I'm still only one person. I'm trying to help you guys. I'm putting these webinars together, but if I miss something like that, that's huge, and Mr. Dev, I appreciate you for that. Shout out, Mr. Dev. Thank you so much. Kevin says, I understand it is dependent on your own strategy, but where should you start to find what works? And are there good basics to start from? Is that what part 2 is for? Yeah, Kevin, so that's more for what part 2 is for, because we'll go over some of the basics, and we'll be creating some basic strategies. But because part 2 won't be till next Saturday, and there's going to be about 5 trading days in between that, you could definitely get started with some of the basics. A lot of people like using the 9 EMA and the 21 EMA for crossovers and for strength on the lower time frames. And like Mr. Dev mentioned about the higher time frames, you could use the 200 moving average and the 50 moving average on the higher time frame to measure strength, and a lot of larger institutions use that 50 and 200 for crossovers, right? So definitely good stuff. Guys, don't forget, hit that like button before we sign out here. I'm probably going to do another couple minutes. Anybody got any other questions, let me know. Key moving average crossovers are a basic system, but but only are not a complete system. Yep, absolutely. Mr. Dev, great point there too. Key moving averages, crossovers are a basic system, but are not a complete system. Everything that I teach you guys, it's just pieces to the puzzle. When I teach risk management, that's a piece to the puzzle. When I teach supply and demand, a piece to the puzzle. Support resistance, a piece to the puzzle. It's up to you guys to put these pieces together and execute accordingly to really establish some type of a strategy, and a full strategy at that. So using crossovers as part of your strategy is great, but what else is there? A crossover isn't just going to be a buy signal or a sell signal, but it could give you an idea of where the market is headed. So if we have a crossover, what else would we look for? Maybe we'd look for some more intraday movement. Maybe we'd look for some stronger momentum. Whatever it is that's part of our strategy, we would implement into that. There's never going to be, oh, buy when the 9 crosses the 21 and then sell when it crosses again. There's never going to be something so simple that works so consistently, because the market is not structured like that. And if it was easy, then everyone would be doing it. You know, it's difficult, and emotions also play a big role in it. Do you have a designated section that only does options, and do you take part in? Yeah, so 0 dates expiration, man. That's a tough cookie. Those are tough. I try to stay away from 0 days. When I'm trading options, I like to do the weekly contracts, whatever expires Friday. I will do 0 days on Friday, but I will go very light in size. I know a couple people in our Discord community do SPX 0 days, and those are pretty phenomenal. But yeah, 0 days definitely depend on the type of market structure we have. So if we're getting a 30-point move on ES, which might be equivalent to 30 points on SPX, that's a strong move. We could see some 0 days really go in our favor. Whereas if we have a smaller range, and say it's 5 points, but it's bouncing, that 5-point range is not going to be as substantial as that 30-point movement. Yep, absolutely. Adding an oscillator to that can also support the moving average crossover signal is a system. When 2 or more things are working together to make something happen, it becomes a system. Very good. Very, very good, Mr. Dev. Appreciate that. Appreciate you for tuning in today, man, and sticking around and dropping these great comments. Really fantastic stuff. Love it, man. All right. I'm going to wrap it up in just another minute or so. Anybody have any last follow-up questions before I sign out here? Definitely drop it in the comments. If not, I hope you guys all have a fantastic weekend. This was a great webinar, and I definitely hope to see you all next week, next Saturday, for next week's webinar, where we'll be creating some strategies that we could maybe use in the market, or to just give us some more of an understanding that strategies aren't just, like Mr. Dev said, just one indicator, just a crossover, just this. There's always more pieces to the puzzle. Alright guys, don't forget to hit that like button before you sign out. Appreciate you all for tuning in. Have a great weekend. Happy trading, and I'll see you guys on Monday. Take care.